What's going on, you guys? My name is Charles and this is the Traders Corner. Today we're just going to be going through some quick analysis, so let's get started. Hey guys, Charles here from the Traders Corner, and you guessed it, we're back with some analysis. So you want to see more analysis or any other content around improving as a trader or an investor, definitely take some time to subscribe as we post content around that weekly. But hope you guys enjoy the video, hope it provides value to you guys, and join us again next time. Thank you. So today we're doing some analysis on, you guys guessed it, the indices futures. Now I'm going to continue to trade the indices futures in this demo account, and honestly start trading more futures like commodity futures as well in this demo account. And on top of that, I'm also getting back into like my own personal trading account, Lock Trading. I'm going to take some, take some challenge accounts as well at some point as well, not before the end of the year, just because I think the trading at the end of the year can be a bit wonky, all this kind of stuff, and it's kind of better to just kind of wait until probably like that end of January, February time is where I'm thinking about getting started. And on top of that, it also kind of just lines up with some things in my life, you know what I mean? And that's another reason why I'm getting back to trading live now. Some other things in my life have kind of like tamped down a bit. It's not my job. I've been studying to go to grad schools, like studying to take like tests to go to grad school, all this kind of stuff. And so kind of got past that, got the scores that I needed or wanted, and I'm like kind of working through a lot of the applications as well. So I kind of have a lot more time to put my focus back into being a much better trader, because I definitely think that while I definitely kept up with my technicals and everything like that, I definitely need to spend more time getting back into the feeling of actually doing the same things every single day that I know I need to do as a good trader, right? Because especially with me building these trading algorithms that I've been building, I haven't really had to do those things to be in the market. Like I've had the trading algorithms running for some months now, or certain trading algorithms running for some time now, and like some others running for like a month now, and so I've had that kind of way to be involved in the market that way. Like I would get an alert from my phone, like, oh, your bot did that, your bot did this, yada, 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 right? But now I want to be back in the market myself, and leave the bots up and running as well. But again, I need to make sure that I'm doing the things that we talk about in terms of treating my trading like a business and, taking it seriously, because, I do that with my job. Like there's certain things that I do every single day with my job, and I should do the same thing with trading. And so that's what we're going to be, doing more of later on, and coming videos as well. So definitely stick around for that. But besides that, let's get into the actual indice analysis going into the next week. So this is a big thing that I need to start doing as well. Get back and doing, especially the way that I'm trading. I definitely keep an eye on the higher time frame and what it is talking about. So I need to do some, beforehand analysis before I step into the market. Now, when I step into the market, I'm very much reactive in terms of what is the market giving me. But, because I look at the higher time frames, it's just easier on me if I actually look at the, do some analysis before I even get near the markets, right? So that's what we're doing today. And we're gonna start with the daily, obviously. And get all these drawings off, old stuff. So looking at the daily of NASDAQ here, we can see, again, we're really just kind of flirting with this area. We did some analysis, posted some videos before where we were kind of looking at the fact that price had run up into this area like this. We kind of pushed above this swing high here, right, with this wick, and formed another wick just above that guy. And it was also above this wick as well, like just barely, but I mean, it got above it. And something like that like a move like that on the NASDAQ isn't really insignificant. It just looks insignificant because we're looking at it on the daily. So we got above that wick, right? And again, we were talking about the idea that I could be completely wrong in thinking that the market wants to go for another leg lower. I'm of the mind that it does, and it wants to sweep these lows to get people trapped on the wrong side before it wants to jump higher. That's my thought, right? And I think it can kind of do that through the beginning of next year, all this kind of stuff. But again, like I said, I can be completely wrong. But even if I was completely wrong and the market is now ready to turn around and pop to the upside, and this, this downtrend that we've been seeing in indices, specifically US stocks, is over, I would still want to only buy in a good area. So I would want to only buy really if we got below this low here, right? And got into this area is the first place that I would care about in terms of looking to buy, right? Like really this wick to this body is that first area that I'm concerned with looking to buy. All right, I would love for it to get all the way down here if that was my, if that was my forecast, if that was my belief that we're going to go higher. I would prefer for it to get down to here, but I would first start being interested here, right? So regardless, I have to, even if I want to buy or sell, to me, the market needs to move lower, right? And I'm not saying that it has to do what I'm saying, but for me to be interested, it's going to be moving lower. And on top of that, like let's say I'm interested on the sell side, it has already moved into an area where I'm interested in it, right? It popped above this high, it popped above this high. It's in a good area over here relative to these, this candle shape formation and what happened in the past, right? Or what I think happened in the past based on the candlesticks, right? And so that being said, it's in a good area to sell from, to try to get lower, to try to buy, even if I was trying to buy. So that's what we're looking at on the daily, right? We're in a good area to try to sell. Really depending on, not depending on like which way you're looking, really. So, and then we could look at basically the previous day's move, or the previous session's move, which would be, since we're moving into Monday, the previous session would obviously be Friday, right? So the previous session's move, and we know that this last Friday, what was that? God, what was Friday? December 1st, I think. December 2nd. Let me just look. This last Friday, right? We had this NFP stuff, and like it was a lot, right? We had some news, and it really just kind of melted. And if you watched the video from last Friday, you know that I was looking for us to get a pop above this area before we tried to drop lower. The market didn't need to do that, so that was definitely one of those cases, like I was talking about when we were doing it. I could just be completely wrong, and the market doesn't need to get above this high to go lower. This could be a good enough area. But if I'm thinking about probabilities, I would prefer to be on the probability of looking to get above this guy, right? And again, that's probabilities. It wasn't on my side that day. It's whatever, right? But what am I looking for in terms of how do we look at, this next trading day, looking at this previous day? Well, we're looking at very much the same thing, right? I want to see how we move within kind of the previous day's kind of range or bound, range bound. So I want to see how we look kind of move within that, like especially moving, through like the opening of futures today on Sunday, and like see what happens there. I don't expect a lot of movement, but there are days, or are Sundays, where you get a lot of like movement outside of the previous day's range already before Monday even rolls around. So want to see if anything like that happens, and if that doesn't, I want to see kind of what do we set up when I wake up on Monday, right? When I wake up on Monday, sit down at the charts, I don't wake up and then immediately sit down at the charts. I take a good 30-45 minutes before I do that, because I wake up pretty early. But when I wake up and I finally sit down at the charts, how's the price action moving within these, this bound of, the previous session's high and lows, if we're still within those high and lows, right? So, well, actually be above here. And let's see where the low is. No, that's good. Yeah. Thursday turns over. Yeah, that's good. All right, so, and then again, we could drop down to the 1 minute and look at it, but there's really nothing more we're going to see here that we would, have to talk about, besides the fact that we do see this nice relative equal high here. We see basically this relative equal high. It's not perfect, but the word is relative, not perfectly equal high. And then we see some relative equal lows as well, all throughout the day, that were printed all throughout the day as we kind of like stair stepped higher, right? And if you want to look about how fading this trend and fading this day, definitely go check out the previous video that we posted. Amber does a breakdown of her trade about how she faded the trend of this crazy trading day. I didn't get into the market at all. She was able to get in, and she was able to effectively fade the trend, so definitely go check that out. But yeah, let's talk about S&P, which is largely going to be the same thing. I'll just type it in. Think, oh, he moves around the charts a little slow. I do. It's just like I mentioned in a previous video, I've traditionally used TradingView. That's kind of been my thing, and I'm now, because I want to trade more futures, I just in terms of the risk to reward profile, it's very easy for me to understand it. Like, oh, this future contract is worth $1.25, or for example, as it relates to indices, they're generally a micro is worth $2 per contract, or $2.25, something like that. All right, so it's very easy for me to understand the risk, in terms of per tick, it's $2, right? So it's if I'm looking for 100 ticks, I know how much that is, right? So kind of it's easy for me to understand the risk to reward profile. Two, it's an easy way for me to play. It's an easy and cheaper way to me to play the indices and to play the entire broader, to play the entire broad stock market as it relates to the US. And really, if I start trading other like European indices as well to play those markets as well. Just because, you can definitely use options. Options provide a good risk to reward profile. But I think especially as it relates to having a smaller account, maybe more liquid options tend to be a bit more expensive. So you can kind of do less with them, right? And so that's kind of why I feel like I definitely still do like look at trading options, but I definitely look at it for more on a company by company basis, because I try to find more inexpensive options where a stock, the underlying stock itself, moves pretty quickly, or has the potential to move pretty quickly to the up or downside. But the options themselves, they're not crazy liquid, but they're liquid enough for me to get in and out of them, right? At a fair rate and all this kind of stuff, and because of that, they're a little bit cheaper, right? So. That being said, we're looking at trading futures here on the S&P as well. And that being said, again, I said it was pretty much the same thing as NASDAQ, which it really is. Again, the first area I would even look to buy from if we're wrong about our higher time frame prediction of this wick to this body. And then I would much prefer for us to get down to here. So regardless, I'm looking for us to come lower, because let's go with the fact that, let's say that my forecast is correct. Let's believe that for a second. Let's hypothetically believe that. Then I think that this is a great area for the sellers to begin that trend lower again from it. Even if they pop above this guy, again, it's still just a good area for them to begin that trend lower, right? So right now we're in a good area to sell from as well, on the sell side. So we're getting down into the 5 minute, and again, we're just going to be framing up how we moved that last day. So let's get this price tool out. There we go. And this guy. All right. And so looking at this, again, we're going to see how we're moving within the bound of, this previous day's trading and kind of what we do there, especially moving from Sunday to Monday, all this good stuff. And then we'll quickly look at Dow. So we've been chit-chatting a little bit. Dow's going to be a little bit different. We'll move the drawing tool. So Dow is kind of more of that situation we're talking about where we're getting above a high, and that even though we're getting above that high, it's still in a really good area to still sell from, right? It's definitely got farther way to go to make a new low, as opposed to S&P, NASDAQ, all this kind of stuff. And that might be an indication to us, if and when that happens, that maybe it is time for the trend to turn around a little bit. Because if you recall way back when I did a video before this whole move up, kind of in that September-October timeframe, and if you don't believe me, go check it out. I'll post the card to it. But I did a video talking about the fact that because Dow was making new lows and S&P and NASDAQ were failing to make new lows, that gave me an indication that we're actually likely to turn around and pop to the upside, right? Because we're kind of in a bit of a divergence between those indices. Now, this could be another place where we could see that, where it's just the flip side, where NASDAQ and S&P could be making new lows, but Dow could be failing to make new lows. Again, giving me an indication that we might be ready to flip back to the upside. But again, my thought is that we're at least going to try to run lower for at least one more set of new lows, right? But that being said, we don't have to. Again, even if we don't, I would much prefer to sell from an area really down here. This is the first area that I'm interested in. Why? Well, we get a swing high, push lower, consolidation, and then sharp displacement higher. Like, look at this price action after this price action. Basically just skipping higher. I'm not concerned with you. I'm not concerned with you. I'm not concerned with any of these sellers. Goodbye. Take out your highs. Thank you very much. And we'll keep going as it is, right? So somebody down here, the market, the fucking algorithm, the machine, whatever, somebody said this is the price we start ticking price from, all right? And that's, to me, indicated by what I just described there in terms of the price action that we saw. But that being said, I'm not going to try to hop on too early, right, in terms of trying to buy this or buy this. And if an easier way to see this in terms of just not looking at the price action, but if you want to use a tool to help you do that, let me make sure I got the right thing. There's a lot of fibs in here. Nope, that's what I wanted. Tool to do that is the fib retracement tool, right? Is not a 50% retracement, right? So I'm not really interested, right? because I need at least a 50% retracement, because that to me gets to this basic idea that you hear in trading when you first get into trading: buy low, sell high, right? If I look for a 50% retracement on a move, then I'm buying when we might be in a trend up, but I'm buying low, right? So that's kind of what we're looking at on the indices today. Hope you guys enjoyed the video, man. Hope it provides some value to you, and join us again next time. Thank you.